Once again, Tesla's stock is surging. As of this video, it is up over 5% and well over $270. 2 or 3 more days like that, and we will reach 300. I even mentioned back when the stock was around 160 that I thought there was a 25% chance Tesla could hit 300 this year. Regrettably, I sold way too early. Clearly, there is now a much higher chance than 25% that Tesla can reach 300 this year, provided there are no frightening macro issues in the market. In fact, many investors believe the opposite may occur, and we see a bull run for the remainder of the year. Of course, there are plenty of other reliable investors also still think a market crash is on the way. As a result, there is still a lot of cash out of the market, and for good reason. It's tempting to receive 5 to 7% interest or so on bonds right now, especially if you expected the market to dip again, except it didn't dip, recovered, and many stocks are at 52-week highs. Who could have predicted that? Not only that, some of these investors who are waiting for the dip are getting FOMO and worried about missing this bull run and starting to get back in. It's a strange time in the world. We have demographics in play too. Baby boomers have a substantial amount of wealth. They are retiring and spending this money anyway. Very hard to predict right now. And Tesla stock has been running an insane amount all year, almost at 3 times from its low. And there's plenty of investors out there trying to explain why this is the case. And it was partly the economy. At the end of last year, we did see a quick market crash. Not just Tesla, but the majors too: Google, Apple, Microsoft, Meta, Nvidia, of which have all recovered exceedingly well. In fact, Tesla has recovered the least well out of them all, implying there is still more potential there. As investors get their heads around it better, these stocks are also benefiting from the potential of AI, of which Tesla should also, as according to Elon, no one else is further ahead. When it comes to AI, of course, Tesla was also under pressure from Twitter, which other stocks weren't feeling. There was the demand drop as well due to higher rates and the economy. And before you interject and say, actually, the demand didn't drop, it was the supply. These are Elon's words, explaining how cars just become more expensive when interest rates are higher. Tesla definitely felt a drop in demand. It just so happened that Tesla was also ramping up supply at the same time, which made it even worse. And we eventually saw the inevitable price drops that increased, and Tesla had to lower prices as there was so much supply. We believe that Twitter has become a part of our lives, and the stock is holding. Investors are becoming more and more at ease with Tesla at these prices. Why wasn't the stock about 400 in the past? Tesla has accomplished so much more. Sure, we're still waiting for some business issues to be resolved, like FSD, but it is getting better, and tests seem to be holding on to the 4680 sales, indicating that they think those issues can also be resolved. And given the current state of the market, it wouldn't even surprise me if Tesla reached all-time highs this year, particularly when we witness the Cybertruck delivery event and witness those trucks roll off the production line. As previously stated, I believe there's a good chance the Tesla Ram will sell 2170 units at launch. In case you didn't know, the energy density of the vehicle is significantly larger than its current 4680 units sold. Technical experts were predicting 300 units if it breaks 270, so yes, I am aware that this kind of analysis is about as reliable as reading tea leaves. But frequently, they are correct when they predict that if a stock reaches a certain level, it may go to another. The problem with them is that, having just reached that level, there doesn't seem to be much resistance to 300. So we may see a wave of institutional buyers buying the stock because the smart money waited to buy in anticipation of a possible crash and didn't want to miss out on this run. Additionally, Rivian is the latest to join GM and Ford in utilizing Tesla's charging network. Any EV OEM that does not have widespread charging faces a serious disadvantage. As we always say, one of Tesla's competitive advantages is the charging network, which is also growing at a faster rate than any other. Yes, it is a nice little business model for Tesla, but when you compare the numbers to the rest of the company, it is hardly the make or break of the company. Rather, it is more about other companies beginning to realize how much further ahead Tesla is and realizing that if they want a chance with EVs, they must collaborate with Tesla and concede defeat. The same will happen with Tesla's FSD. When we hear Ford announce that they will license test as FSD, it will have the same effect on Tesla stock. Unless they can collaborate with Tesla, cars appear extinct. Of course, there is a small problem of their EVs costing about twice as much to make an EV as they actually sell for, not the best business model, and they're working hard to try and to sort that out and investing tens of billions of dollars into their own cell and battery factories. But they have a long way to go still. And that is another part of why Tesla stock is doing so well. Sure, Tesla's prices and margins are lower than they used to be, but the market has somewhat forgiven that now. We compare how much Ford are struggling with cost of EVs, and we can only begin to imagine how much GM must be struggling. I wonder what the cost of goods sold is for the Hummer alone. Making EVs is a tough game, and the number of times we have heard Elon saying making them at volume production is really hard, and a profit too is near impossible. The US government is even helping out about $10,000 per EV, including subsidies and tax credits. But it's still not enough for legacy. We're hearing more about Elon looking at manufacturing in India. Investor opinions on this one are really divided, and we don't know what kind of production would be used, whether it be megapacks or something smaller, like what Mexico would be used for autos. However, consider the size of the Indian market for EVs, as well as the lack of infrastructure for charging, as well as the fact that FSD will be more stringent there than in almost any other country in the world. If Tesla were to establish a factory there, despite not having enough money to set up its own network or reduce costs, it manages to reach its 5-year pricing goal of $1,000, mostly because of Wright's Law. According to ARK's interpretation of Wright's Law, Tesla can cut costs, but it can't build factories efficiently, create an autonomous network, or reach the $2,500 price target in the Golden Goose, which has a 12% chance of happening. In this case, Tesla can accomplish all of its goals. It can lower expenses, construct factories more efficiently, and introduce its autonomous network. ARK Invests, a company that oversees assets valued at about $11 billion, has said that in an attempt to be as fair and unbiased as possible, it arrived at that price objective by comparing the likelihood of 10 different outcomes, including bankruptcy. The business also thinks that, barring the most improbable circumstance, Tesla would sell $10 billion worth of stock to increase output because the company is headed toward the Golden Goose situation. In light of this probability matrix, it would likely produce Gen 3 vehicles, but it might also serve as an export hub, much like Shanghai does for Model Y and Model 3 rear-wheel drive. The company also believes that, in all but the most unlikely scenario, Tesla would sell $10 billion worth of its stocks to boost production as things are trending towards Tesla hitting the Golden Goose scenario. Based on this probability matrix, or maybe it will serve the domestic market quite well, but Tesla wants to diversify their export facilities rather than relying solely on China. Elon claimed that the cost of the Gen 3 model was half that of the Model 3, so I believe that part of the reason for this could be the cheaper labor costs in Mexico as opposed to Texas or California. Additionally, a second factory is set to open this year, which would boost confidence and growth. However, I would like to know more about the accompanying cell and battery factories, as sales are still a crucial component of EV manufacturing. Regardless, 300 is undoubtedly on the horizon, and deliveries are scheduled in less than 2 weeks.